right, so today is the 16th of November. We're going to go over NAS and gold setups for London or New York here. So just going to be focusing on this zone here. So plan A would be a break above 860 on a 30-minute time frame. That would be playing out the breakout trade for that session and for mostly New York, right? So New York, if we break above 860, then we'll be doing a breakout trade to just buy. So close above 860, we buy, and to fill the range to 900. All right, so it's like a 40 point range. If plan A fails and we close above, and we take that buy and we end up closing back below 960, then we cut the loser short, and plan B would be then buy back at sell at 860 to then continue down and go to the bottom of the range. So something like right back down to the bottom of the range, and that's what we'll be looking at price to do in that area if we are wrong the first time. So that'd be plan B. Okay, that's plan B. Now, if price doesn't even end up getting up there and not closing above and rejecting, then we wait till price closes below 751, right? So close below 751, right? So price then starts closing below 751. That would be the short entry to then just ride this as long as we can to the downside. All right, very simple. Let's just plan A, recap plan A, close above, buy, plan B, close above, fails, cut the loser short, sell, and then plan C is if plan A and B don't happen, right? And we come back down and we close below 50, then that's the short to go down. Gold. Just go back and put a line here. That would be TP. All right. So same kind of idea with gold here. Same thing. I'm just gonna be looking at gold and NAS, whatever prints the best looking candles at those areas, I'll be taking that trade. Pretty much the same range. So plan A would be a break above, then we'd be taking out that breakout trade to then just continue to 1992.6 around this area. Plan B would be if plan A fails, cut the loser short, become sellers back down to the range. And why I want to push through this low and push through this low is because if this is happening at a time of volume, right, this move up here, we close above and close back below, then we have enough liquidity, right, to then push down to the downside, taking out these like small supports, right? With that volume, you expect that to continue at least at the bottom of the range here. But if, for example, a bearish candle prints here, I wouldn't expect it to then continue down and push through these lows because liquidity hasn't been taken in this area, right? Right, so that would be plan B, right? Then continue down, and then plan C, what it is if we just reject this area, we don't close above, which is fine. We just wait for volume to push down, and once volume pushes down, closing below 980.8, 1980.8, then we will want to see that further push down and fill this candle up in this move. Right, so very, very simple. Same setups on these two pairs, just waiting to see which one prints out the best.